The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, coming into the Thanksgiving holiday, folks. We have a full day today. Market open for a half day on Friday. Tiger's Den this morning telling me something I didn't know. Futures will be trading, closing early on Friday, but they will trade through Thanksgiving, interesting enough. I guess that's the case. Sometimes they are open on holidays, even if the markets are closed. Nonetheless, we will be closed on Friday. I'll probably be in the Tiger's Den, though, folks. If you're not in the Tiger's Den, come on into the Den, check it out. It's $1 for the year, basically to make sure that we're just verifying everybody's identity so that there's not a bunch of spammers in there. Great action in there in the Tiger's Den. Early, late, over the weekend, we're getting action in there, which is pretty cool, and I'm sure there'll be some action in there on Friday, and today we got a full day in the market, though, a full day of programming today, and S&Ps, a little bit of negative action in the last half hour or so. 8 in the morning, we were up there at about 4,020 almost. We're trading right now at 4,007, but you see the run yesterday, man. It was a one-way trip from about 7 in the morning at 39.56. We ended the session about 55 points higher at 4,010, and we're basically right at that level, negative by 3 points. NASDAQ 100, we're positive by 3 points. The Dow is negative by 43. 34,000, the sacred number, above 34,000 in the Dow. The Russell, negative by 4. Bitcoin, I don't know how it's doing it, folks, but Bitcoin's up $1,000 from where it was on Monday. Every single day, it seems like I pull up the headlines, folks. I talk about it because I have to, because it's just everywhere, and unfortunately it could reverberate into areas outside of crypto that is so pervasive. But nonetheless, Bitcoin persists, pushing 16,400 this morning, technically up $360 on the session. Ethereum, you're up 3.1% as well. We jumped to crude. How about some volatility, man? On Monday, you got the volatility down to 75. This morning, we just moved from about $82 down to 78. That was a $4 move from 5 in the morning to where we were just recently. We're popping a bit, but 78.66. We might be seeing some lower prices at the pump, especially lower than what we were seeing when you had crude trading about 2 weeks ago above $90. We're sitting at 78. I talked about on that slide we got Monday, folks, okay? When you saw a 75 handle, we hadn't seen a price of $75 in crude since January 2nd or 3rd. I think we only saw it for 2 days to kick off the year. Lower energy prices at the pump, that would help everything going out right now. Gold contract, there's some volatility for you, man. We got the jobs number this morning. We'll jump over to that in a moment. Market reacting a bit to the jobs number. Now, we get the Fed minutes at 2 p.m. Eastern time. That'll be an interesting one, right? Very light market in terms of coming into the Thanksgiving holiday. We get the Fed minutes at 2 o'clock. You're going to have a light market with the Fed minutes, potential for some volatility for sure in a light market. You always have potential for volatility when the markets are especially light, folks. And look at the 10-year, the volatility we have this morning. Around that spike at 8:30, you're down to 112.08, just like that. We're basically flat, but you just moved down 11 ticks and up 11 ticks, back to 112.19 in the 10-year, the 30-year. There's some volatility for you, but we got higher price in the 30-year to 127. You take a look at the 30-year, okay? Now, we got quite a little bounce going. I'm going to take this Fibonacci number off there for a second. I've talked about this trend line for a while, man, from 2000 basically, okay, to where you slammed through this trend line on the beginning of this year. Pretty remarkable that you could have been in the 30-year at 191. You're sitting at 126. And the point being, look how small this bounce is so far, man. You get a real bounce, you can come right back up to that trend line. That's not outlandish at all. You started the year at 161. You'd get to about 146. We're at 126 right now in the 30-year. It just shows how far things have really gone in the bond market. We jump over to the VIX. How about that, man? Look at that action. Talk about a double top, and then it's all red on the VIX. We're pushing 2169 yesterday, 2128. Maybe we get a reprieve for the Thanksgiving holiday. What I will say is we're coming right into the area where the VIX has seen its lowest level of comfort, as in about 20. You did make it to 16 to kick off the year, folks, but since then, Anytime you've gotten a pullback in the VIX, you see the tops there, okay? 38.94, 37 and change, 36 and change, 35 and change, and we hit 34 and change on a couple occasions before we pulled back. You really pull back to about 20, okay? We're talking about some similarities in terms of the reprieve we've gotten here. From 34 down to 21, it's been a period now stretching about 6 weeks, which is remarkable when you think the VIX has been declining for basically 6 weeks at this point. But guess what? Those are pretty similar areas in terms of the pullbacks we've had, and you see the spikes on this chart. So keep the spikes up on your back, man, as we come back from Thanksgiving into December. And just like that, folks, we come back and we only have 3 trading days left in the month, okay? So we get a half day on Friday, November 25th. Tomorrow, of course, Thanksgiving. We come back for 3 trading days. And a week from tomorrow, we kick off December. We're going to start getting non-farm payrolls. You're going to get CPI. You're going to get PPI, right? We get a Fed meeting, December 13th, 12th and 13th, 13th, 14th. Let's see. Maybe 13th and 14th, we get a Fed meeting. So it rolls pretty quickly, man. We come back. You got 3 days in November. Just like that, we're into December. We're going to get economic numbers. We're going to get a Fed meeting. Keep your eye on that, because the trend is not going to be from 34 to 20 forever on the volatility. We're going to see some spikes, folks, because even if you believe that we've peaked out in inflation, okay, even if you believe that the trend is our friend, you could say, in terms of inflation dissipating, there's going to be some hiccups in the road, man. There's going to be some speed bumps where the numbers maybe don't agree, just like every time that we've seen a reprieve on inflation, and then somehow it's canceled out by the further months that say, hey, you know what? That pause in inflation was just a little bit of variance, and unfortunately, it looks like the trend is still accelerating. Well, we're going to see the same thing even if we're going on the way down, right? Those numbers are going down. They're not all going to be a reaction like they were last month, where you saw CPI softer than the market expected, especially on the core on a month-over-month basis, and the market reacted. It's not always going to be that simple. So we're going to see those volatility numbers. And yeah, when the volatility was at 35, folks, very easy to rationalize selling some volatility. A little bit more difficult to rationalize selling volatility at 21 right now when the S&Ps are at 4,000. We're coming into a holiday season that's going to have winners and losers in terms of retail, holidays, Christmas, etc. And we got a lot in play, to say the least. This morning, we got jobless claims. 3-month high, but boy, you're still talking about a pretty low number, man. If this is what a max paying situation looks like in the economy, folks, this is not what it looks like, okay? Applications rose to 240,000. The market was looking for 225. Continuing claims increased amid layoffs in the tech sector. So the trend, okay, is going in the right direction. But boy, these are pretty small numbers when you look at the size of the economy and how many jobs we're adding on a monthly basis. Still unemployment, still in the 3s, right? Let alone still in the mid-3s, not even in the 3s. Initial unemployment's increasing by 17,000. That's for the week ended November 19th. Median estimate was 225, as we said. The continuing claims, okay, now that's a week delayed. That's as of November 12th. Rose by 48,000 to 1.55 million. And you look at the trend, okay, that's just a lot of volatility between 2 and 250. That's what I see, man. You know, I see a lot of volatility between 2 and 250. Don't get caught up in 17,000 jobs on that number, folks. Fed minutes much more important tonight. Today, 2 p.m. Eastern time. Stay tuned, folks. We got a lot to talk about on the Wednesday before Thanksgiving. I'll be right back in 3 minutes. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of tfnn.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at tfnn.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&Ps down by 1 point right now, trading at 4,008. You see the run-up we had yesterday, week ago, last Thursday. You're talking about 39.12, so a solid 100 points above where we're trading at. We got volatility across the board. Let's check in on the currencies right now with the dollar index pulling back a bit. Take a look at the dollar on a daily. Didn't quite make it up to the 382 in terms of that bounce we had from a period about on November 16th, lasting about 4 days up to the 21st. We've pulled back a bit to 106.80. We'll see where the dollar goes on the euro-US dollar. A little bit of inverse action there as you pull back and we're accelerating higher, now above 103. Pretty remarkable, the change from 95, right? Well below parity, and just like that, even where we were November 4th, right? 19 days ago, folks, the euro dollar was at 97, and we are at 103 right now. Still probably a good time to lock in some euros if you plan on going over there anytime soon in the future. It's a trade. That's all it is. It's risk reward. But what's your risk, right? If you're going over to Europe, your risk is, well, it trades back lower. Yeah, your reward, well, trades up higher. I think it's a pretty good scenario when you're getting the euro at 103, considering the history of where it's been. You jump over to the yen. Yen still above 140 right now, but a little bit of a pullback as well, off about 41 ticks on the yen at 140.80. All right, jumping around. Let's see how Tesla's trading this morning. I think it was a little bit higher. Yeah, you're up by about $4. But boy, Tesla, maybe this is the area that it finds a bid. Morgan Stanley may think so. We jump over Tesla's share, as the headline says. The stock slump has gone too far. Morgan Stanley says it's down 52% this year, $300 billion wiped out in 2 months. And maybe finally it's reached an area of value. But boy, I bring it up, folks, and you put this thing just on a 5-year weekly, okay? So Elon, rightfully so in my opinion, is catching a lot of grief. He should be catching a lot more grief, though, okay? As to the performance of Tesla since he's been distracted with Twitter. It started in April when Tesla was at 370. It's now at 170. So the market's been tough. Nothing like what's going on there. Here's the kicker, though, okay? Excuse me, you came into COVID, you came into the year 2020, and Tesla was at $30. You're at 170. So that's where you, can still get in trouble, folks, on this equity. That's all I'm bringing out, right? You look at this thing on a 3-year, a 2-year, it's vastly underperforming the stock market. So you could say, okay, there's dramatic value here because Tesla's still going to be around. Elon has built it to a company that, of course, is going to be around in the future. Changed the way the whole world makes electric vehicles. I'm down from 414. I'm down from 360 at the start of Twitter. I'm down from 313 as recently as 2 months ago at 170. But keep in mind, folks, many investors, okay, coming into COVID, you were at $62, and that was after you ran from 30 to 60. You doubled in price at the beginning of 2020. COVID hit, you pulled back to $30, and then this thing accelerated to 414. It's all adjusted post-split, but keep that in mind when you see notes like this, okay? Because it's a mess over there right now. I'm not sure what's happening with Twitter. Eventually, Elon will load that off in terms of the CEO position to some degree. Otherwise, I mean, this is where you need some corporate governance. I'd be irate if I was a Tesla shareholder and the CEO was sleeping at another business's headquarters as the stock was getting cut in half in almost in 2 months, right? So we'll see where that plays out. But nonetheless, Morgan Stanley approaching his bear case price target. So that means it's all playing out, man, because you're at 170. Yesterday you got down to 166 and the bear case was 150. It's a pretty big bear case in terms of the dominoes falling with China, with the recalls with Tesla, and with Twitter, of course. Citi analysts upgraded the shares to neutral from sell, saying the more than 50% slump has balanced out the near-term risk-reward out there. Let's see. Despite the challenges and the price cuts in China, Tesla is the only electric vehicle maker covered by Morgan Stanley that generates a profit on the sale of its cars. Well, they might be, man, but they got a lot of people coming for their lunch in terms of the regular big car dealers out there, producers. And yeah, you're up a little bit today, but we'll see where that plays out, man. But nonetheless, you're starting to see some of the investment banks out there coming in and saying, you know what, maybe this is an area, and maybe it is. You're below this area, though, back in the beginning of 2021. And the dicey part is you're basically into this consolidation area. You reached a high of 167.50, folks, back in August of 2020. Before trading to 414, and just like that, Tesla gives it all back. And yeah, we're sitting at the 618. That's the last thing I wanted to point out there, because you're sitting at a 618, man. You'll see where that goes in a big way. Yeah, I'm not sure. Do they cover them? You know, Hyundai, man. I tell you, Hyundai and Kia. I'm looking at SUVs recently, man. Kia and Hyundai, they got some great SUVs. Kia especially, for what you get, value for your dollar. I think Kia might be one of the best cars out there, man. I was looking at the Telluride out there, and boy, it's a heck of a vehicle. And I don't own any Kia shares, folks. I've never owned a Kia, but they got some sleek vehicles for the cost that you're paying. That Telluride's one of the best SUVs out there. They got 3 rows in that Kia. So yeah, interesting how that plays out. But I've really started to look at those recently as potentially looking at some SUVs. I tell you, if you're looking at the market. The other one that I love out there, though, a little GMC Yukon. Denali, why not? Those are some amazing vehicles as well. Chevy Tahoe, many great SUVs. With gas prices where they are, you might be able to find some deals on SUVs, folks, especially as you get a little bit of dislocation in this used vehicle, new vehicle market in cars. Was he? Yeah, they got some good cars, man. Kia's got some good cars right now, especially for the value of the dollar. You know, I have a BMW right now. I love BMWs. You look at and we'll digress, right? You look at the Kia Telluride, and then you look at the BMW X7. BMW X7 is about $100,000. Kia Telluride's about $50,000 or $60,000. And yes, the BMW X7 is a nicer vehicle. But boy, for the value for the dollar, that Kia Telluride that's running at $50,000 or $60,000, folks, is a 3-row SUV with a bunch of bells and whistles, all leather interior, all this stuff. So anyway, if you're in the market, check it out, man, because it is a cool vehicle. And they just came out, the Telluride, with their 2023, which is pretty ramped up, and they got a pretty cool screen display, etc. I'll pull it up, man, because you know what? We like giving out good info. If you're in the market, man, for a 3-row midsize SUV, and you want value for your dollar, Kia Telluride. I'm gonna have to go buy some Kia shares, man. Well, maybe I'll look at it before the open. Psyching myself up, but I'm amazed every time I see it, folks, and they're everywhere. I'm sure you've seen them. The Tellurides, the Kia, they got a good thing going. Kia, yeah, they really do. All right, let's see what else we have going on. Back to the market. Let's see, what do we have? We're gonna talk a little bit of FTX, but I'm saving that one as far as I can. And you know what? We'll talk about this as we come into the opening bell. We'll get ready for it. And tonight, folks, talked about it yesterday, man. I had a great job working for a distributor, Budweiser distributor in Philadelphia when I was in Villanova University, and that is when I found out that Thanksgiving is the biggest drinking night of the year. So be safe out there, folks. Even if you're on the road not drinking, be aware that unfortunately tonight's the biggest drinking night of the year. A lot of people are going to be out there drinking. Be safe on the roads. Take an Uber if you want to, man. Have some fun with friends and family. If you're traveling, be safe on the roads so you get there in one place. But yeah, biggest drinking night of the year, man. Tonight. They got a bunch of reasons, man. They all make sense in terms of very few people work on Thanksgiving, a lot of people coming home to see family, not a lot of people hosting big events at home the night before Thanksgiving because they're doing big Thanksgiving dinners. So what do? You go out with friends, you meet some friends. When I was younger, maybe I'm still, when I was younger, reunions, that type of deal. Anyway, be safe out there, folks, no matter what you're doing over Thanksgiving. We'll be right back for the opening bell. Stay tuned. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of tfnn.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting tfnn.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on tfnn.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at tfnn.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of tfnn.com.
Welcome back. We got markets open, folks, and you open in negative territory across the board, but barely. You're talking about single digits across the board. S&P's down by 2. NASDAQ 100 down by 2. Dow off by 8, and the Russell negative by 4. Crude dropping to $78.30. We got the gold contract, and I'm not even sure if that spike is maybe legit, down to $17.19. You probably had some lows around $17.33. We're sitting at $17.37. We jump over to notes and bonds on the open. and a little bit of a reversal from where we were at about 8 or 8:30. We trade higher, 112.20, excuse me, on the 10-year, and we check in on the VIX right now. Volatility index coming into Thanksgiving holiday at some of the most recent lows that we've seen at 2167. All right, speaking of notes and bonds and yields, we jump over mortgage rates declining for the second week to hit a 2-month low, but boy, how's that low? 6.67%. We'll call it 6.7% right now. The contract rate on the 30-year fixed mortgage decreasing 23 basis points. That is a decrease. We've seen some decreases before, though. You're looking for a real change of trend before you want to do anything, man, and I'm not so sure we're there. You have a slight decline, but boy, that is from an area of around 3% for an extended period of time, to say the least, as we push 7%. And yeah, so the slide in borrowing costs has helped stir demand, okay? As the group's index of applications to buy a home climbed 2.8%. Yeah, and I would say, percentages on small numbers can be deceiving, folks. That marked the third straight increase since the gauge stumbled to the weakest level since 2015. It was the weakest level in 7 years, and meanwhile, you've risen 3%, which is basically nothing when you're at a small number, to say the least on that, right? They were talking about this in the den earlier. Interesting to see how it plays out, man. China, they got a mess on their hands, and Apple is in China, even though they're trying to move some of that supply chain out of there. But you got violent protests erupting at their main iPhone plant in China. You got video out there showing hundreds of workers breaking out of dorm rooms. I mean, China's like a dystopian reality show in the works, unfortunately, for the people there just trying to survive. You got hundreds of workers clashing with security personnel. This is at Foxconn. They're streaming out of their dormitories. Okay, number one, we're just so used to everybody. I mean, the workers just live in dorms. I mean, imagine if the U.S. had people where they were just living in dorms everywhere, right? It's a different society, man. Thankfully for the U.S., we don't live in that type of a society, especially when you throw in the zero COVID on top of it. So they're living in dorms. Number one, this started over unpaid wages. They're talking about lockdowns as well. I don't know how it happens. I was talking about yesterday, something like they had the first death in like 5 months. Right? I mean, how many deaths in the U.S. are we having right now? And it's hundreds, I think, a day is going on. And they had 1 death in 6 months. I just don't know how that presses out there to any degree in terms of how that policy plays out. Because number one, it either plays out and you get massive deaths, okay? Or it plays out that they have to keep locking people down. They kind of have to choose between the two, which is very unfortunate. And that's what happens, though, when they've basically paused COVID for 2.5 years while it's spread throughout the world outside of China. So you're seeing some of those riots, protests taking place, man, as it plays out over and over. All right, what else do we have pulled up here? Let's see. Yeah, we got Fed meetings, of course. Pay attention to them. Coming up at 2 p.m. Eastern time, we'll see what they have to say in terms of reiterating what they're going to do going forward is what the market will be looking for. Talked about jobless claims. All right, let's talk a little bit of crypto. So, I got to find the perfect article to study, not the right article. Yeah, here's the one. So, 51 billion. So, Bankman-Fried says collateral crashed by 51 billion as FTX fell. Okay. Again, apologizes. I mean, it's such hollow everything, to put it lightly. So supposedly, this is in the letter, collateral crashed to 9 billion from 60, okay? A slide in the digital asset markets in spring roughly halved collateral to 30 billion. So it went down to 30 already. He said liabilities were 2 billion. They don't even know what the liabilities were, would be my guess, okay? From what the guy that just stepped in as CEO has said, there's no way they were keeping track of really anything that they needed to. And he blames a combination of credit squeeze, a further sell-off in virtual coins, and a run on the bank left collateral at $9 billion ahead of FTX's bankruptcy, and liabilities reached $8 billion. I was talking to a friend last night, and I've been comparing it to online poker a lot, okay? Because it's very comparable. It's exchanges set up in unregulated areas outside of the U.S. that you send your money to, that you trust to keep segregated, and you trust to send back to you, and is guaranteed by nothing but the guarantee of that company existing. And companies go BK all the time, okay? And I said to a friend, it would have been like So it would have been like, I've told you the fears I had in online poker, as in just assessing the risks. They're not fears, risks, right? It was the fear of that company getting shut down and the money I had in there getting taken. It was a very real fear, and you had to assign a level of risk to that capital that you kept in that account. What if poker sites, okay, to put in context how crazy this thing was, what if online poker sites back in the day were saying, Full Tilt Poker, open an account for $100 with us, you can play poker, and we'll pay you 8% on your account balance while you keep it in there because online poker is exploding, and we can take your money and make 8% a year on it for you if you lend it to us when you're not using it. They probably would have gotten shut down overnight because everybody would have said it's an automatic scam, okay? Because it would have been an automatic scam because it ended up being a scam and they weren't even giving you 8% full tilt. They were just taking everybody's money and for whatever reason, right? But that's how again it was. So it's pretty crazy that they were able to guarantee interest rates in a 0% interest rate environment. Nobody could be sure of where the money rested, and it was all a trust scenario, which just makes no sense, man. And some of the biggest people on Wall Street out there. I think I saw Tiger Global yesterday. I think they pay, was it Bain? I think they paid Bain Capital. Tiger Global, who is an investor, pays Bain Capital $100 million a year to do due diligence on the private company deals that they're doing. And Bain did the due diligence. One of the things they pointed out was the intertwined nature of the companies, but they didn't point it out to a degree that said they shouldn't do the deal. And they did the deal, paying $100 million for due diligence. And they let you jump in on this deal, which I don't know how you do when you obviously nothing was verified at all, because the moment the new CEO stepped in and looked at everything, I mean, it didn't take long, folks, right? Binance, whatever they looked at, they got to get it in 2 seconds. Binance said, we'll buy them, we'll bail them out, assuming, right, that as we do the due diligence, there's nothing there. And within hours, it was like, no, we saw the paperwork, and they've got loans that make no sense, and we're not going to do it. So somehow this just wasn't done. And him saying that this all fell apart without thinking, I did not realize the full extent of the margin position, nor did I realize the magnitude of risk. You can almost do it in an SNL skit voice. It's important to just keep all of that to front and center as this comes, because this is a PR spin, man. And, Holmes just got 11 years, Elizabeth Holmes, from running a pretty big scam on multiple people. But I'm going to pull up after the break, man, because I saw there's another reality show couple that just got put in jail for like 7-12 years, something like that, for scamming people. And he actually got more time than Holmes, which I guess, talking about millions versus billions, though, we'll see. But nonetheless, we'll talk a little bit more about this and the term hyper-correlated crash, because that really is the essence. When you put up collateral that's hyper-correlated to the loan it's collateralizing. We'll be right back, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at tfnn.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at tfnn.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the markets open, and you got the S&P right now catching a little bit in the last few minutes. We're up by 7 points to 4,017. You got the NASDAQ 100 up 37. You got the Dow right now up by 46. We got the dollar index a little bit lower on the session. We're negative by 40 to 106.81. Let's jump over to our man, Teddy Kegstat. We talk to Teddy every Wednesday, folks, and you can check out his newsletter, the Tiger Forex Report, under the newsletter tab at TFNN. You can subscribe, folks. You get a 30-day money-back guarantee. You got some time over the Thanksgiving holiday. Maybe dive into some of the newsletters he's done. And you also get, folks, the webinar that he just did, Forex Strategies and Fundamentals. So check that out over the weekend, potentially, if you have some time. Teddy Kegstat, it's been a couple weeks since we talked to you. We've had a lot going on in this market. Good morning, man.
Good morning, Tommy. Happy Thanksgiving to you, the crew, and all the Tigers and Tigresses out there.
You as well, man. I hope you have a great holiday. And how's the weather in beautiful, windy city of Chicago this morning, man?
You know what? It's actually, we're back to normal temperatures. We're hovering around the upper 40s, around 50s. It was nice yesterday. It's going to be nice today, next couple of days.
Oof,
Not
when
like
you
last,
said normal
last
temperatures, I didn't know if you were going to say normal temperatures or you were going to say single digits. I'm not familiar with where I know it's a little cold out there. Well, Teddy, man, where do we start? We've had quite a couple weeks since we talked to you last. I know you've had the letter out each of those weeks, this Monday included. But boy, where do you want to kick things off right now? As we go?
We should start with crude oil because I know you guys like that one.
Let's do it.
All right. Well, 2 days ago we had a nice spike low. Interesting little pattern forming on the bottom here. So I know everyone is super bearish and being like, oh, everything's happy in oil land right now. And I think that one of the things you can really attribute it is to two things. One is the fact that supply chains have dropped, from the problems they had of over a year ago and a year ago. Interestingly enough, I read an interesting statistic about container pricing. When you ship things from China or wherever around the globe, because of all the backlogs, things were getting very expensive, as far as shipping things. We're back to pre-pandemic pricing, supposedly, almost globally. That's a big deal because now you don't have tankers that are sitting there just burning diesel and gas everywhere, So that's one thing that's kind of nice. I still attribute it right now to it's just a correction. I think we're going to get a bounce. I think we're having a nice Thanksgiving holiday here as far as the pricing, but I wouldn't get married to these prices. I think we're going to still see the energy prices accelerate to the upside once we head into the wintertime.
If people are looking for areas, Teddy, to the downside, it's like pretty interesting, right? We just got to $75, and yeah, you didn't even get down there when I got crude back in September, and I think we hadn't seen that really since the beginning of the year. Right. For people looking for potential areas where maybe you're looking for a buy, is this kind of the area back to the lows of September? You're looking for it to trade a little lower? Where do you see some of those areas, especially crude? We're sitting at $78 and change.
Oh, I think the mid 70s to $80 is a fantastic buying area for crude right now. So, I mean, no matter what, we haven't even begun to see winter yet. You know, I mean, we've had nationally, we had a cold spell, you know, over the past 2 weeks. You know, they hit basically the whole country a little bit early. But we're in November, you know. I mean, I think that once you see December and January hit and we actually have snow, I mean, look at upstate New York, what's going on there, you know, and the whole Northeast. You know, this is the big, it's Thanksgiving and they already look like, you know, January of like 1978. They're buried, you know. So, and I think that this is definitely going to have an impact on energy prices moving forward, you know. And we also have to got to remember that the interest rate market right now, yields are down nicely. This is a correction. The Fed still has a Fed meeting in December in a couple of weeks where they're raising 0.5 point. And the outlook for no matter what for the first two Fed meetings in the 2023 is that they're going to at least raise 0.25 point. So they're not going to stop raising rates. So that differential has the least yields going higher to some degree and making new lows on the pricing in the bond market over the next couple of months. And that's going to affect the dollar. So I think the dollar will snap back on that also.
Yeah, it's pretty interesting, some of the moves we've gotten in both directions. I just had the 10-year up as you were talking. I have the dollar index up now, Teddy. We're sitting at 106. We were just at 107 a couple days ago. But, boy, quite a pullback from 113. Again, kind of areas. Is this kind of the area potentially? If you're looking for a bounce, could it trend a little bit lower? It's been quite a pullback from that 113 area. And crazy to think that that's in November, folks. It was at 113, and you were just at a 105 handle. You're trading at 106.58 right now. Where do you see kind of those areas for the dollar potentially if you're looking for that bounce higher?
Well, the same thing like I just said with crude. I like where the dollar index is at right now. I mean, if right now I think right around 105.5 to 106 even in the dollar index is where you're finding good support, and that's a directional pivot area. So if this is just a correction, let's just say that, I mean, the overall trend for the dollar is still a bull. The overall trend for crude oil is still a bull. All these markets are still in a corrective phase. I mean, unless you want to say that you're going to call a top or a bottom and say that these markets have all turned already, you know. So, but to say that means that you're saying that interest rate yields are going to go down and bond prices are going to trend higher now for the next couple of months. I don't see that happening. I don't see how fundamentally you could have yields continue to drop over the next couple of months. You know, maybe oil can still continue to trend lower, but I don't see how going into the wintertime when you have that demand function that's going to come in there, at the very least, I think that's going to be stable, you know. But on a currency basis for the dollar, I don't see that this trend that the dollar is a bear overall going into the next month or two and the first quarter of 2023. The fundamentals just aren't there yet, unless we see a radical change in the Fed speak come, say, the December meeting, or we see something where, say, like, let's say the ECB, the Bank of Japan, all of a sudden starts to, you know, do some things, and that's a key thing right there. I think the dollar might turn come April. If it's gonna turn, it's not gonna happen now. It's gonna happen around April. And the one reason would be is that you're gonna have a turnover in the Bank of Japan. When you have new leadership in the Bank of Japan, you have to wonder, is this speak that they've had over the past couple of months, are they going to actually jump on the bandwagon? If the BOJ starts raising interest rates like the ECB and the Bank of England and the Bank of Australia and what have you, that would start to change things. But until that differential really hits and we start to see speak like that, where you see aggressive raising from, say, Japan and the rest of the central banks and an easing on our part, then right now we're in a correction. I think we're pressing it, and I think that you'd be foolish to try and pick say that we're in the beginning of a turned market and the really, a big leg lower for the dollar. I mean, anything can happen, but the fundamentals just really, really don't look like they're set up for that. And we have the stock market too that's very jittery. I wouldn't take too much faith on what's going on with the S&Ps right now, especially. I mean, I heard you talking about Tesla. People may not be happy with the break in Tesla, but a year and a half ago, I mean, any commonsensical trader or investor was saying, okay, with a PE ratio of like 500, how could this stock possibly be a reality? You want to talk about FTX being that we know that that's a Ponzi scheme. They went in there with the intention of committing fraud and defrauding people from the get-go. Tesla is a different story. That's a real business, but it was overinflated. Every mutual fund bought it. Every millennial bought it. They're like, oh, yeah, got to buy Tesla. That's the future. It's like riding the Dell train of the 90s. Most people don't remember Dell was like that. All these companies had these waves. And now all of a sudden, is Dell sexy? No. Would you buy Dell as a long-term investment? Well, you might have it in your portfolio, but you're not looking for that to be any type of growth stock. It's the same thing with these other markets, and it's going to hit us.
Can you hang with us for the break, Teddy?
Sure.
Perfect. If it will come back, folks, we'll talk a little bit. I just wanted to talk about the yen a little bit more, and I have Tesla up. We'll finish that conversation as well. Folks, we'll be right back. Stay tuned. We'll be back with Teddy.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding the reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of tfnnn.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at tfnn.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at tfnn.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. tfnn.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of tfnn.com.
Welcome back, folks. We're talking to our man Teddy Kegstad. And folks, you got time over the long weekend, check out Teddy's report, the Tiger Forex Report. When you sign up, you gain immediate access to the recent 60-minute webinar he did, Forex Strategies and Fundamentals, what is behind the Tiger Forex Report. So you check it out. You get the newsletter for 30 days. You can cancel with a 30-day money-back guarantee. You still get the webinar in there. And yeah, Tesla, Teddy. So real quick, it's pretty interesting because it's vastly underperformed the market, obviously, over the last 2 months, over this year. But boy, like you said, you put it, man, and I couldn't even believe it myself, that you kicked off the year 2020 at about $28, $29, and we're sitting at $176. So obviously things could still be a little bit out of whack. We'll see where that stock rests, but quite the story. Back to the dollar and the yen real quick, Teddy. Sure. If you're looking for a bounce to some degree right now, potentially, to this area. What would do that, Teddy? Is it just a market sentiment? Is it just that we've pulled back too much? Or is it something that you'd look for, an economic data point that maybe drives some of that action?
I think right now with the yen, the biggest thing is your sell-off in crude and your slide in yield is helping the yen. I mean, especially since we started our conversation like less than 10 minutes ago, the dollar's just gotten hit for like almost $0.50 versus the major currencies. I mean, the euro just and the yen are both moving nicely. The pound just made new highs against the dollar on a daily basis. So. The yen, I think right now it's riding that train with lower yields, and I would be remember, we're also in a holiday market. Today's Wednesday. It's nice. Everyone's all happy. Yeah, let's sell the dollar. This is great. But you know what? Volumes are when they start to dry up today sometime, they're dried up until Monday in the U.S.,
And what do you think about the Fed minutes at 2 o'clock today on a dry, low volume type day? You looking for anything there?
Well, that actually is what scares me, is that the interpretation of the media will be interesting on it. If the minutes come out where it pretty much goes against the narrative, I mean, you got to realize the media has been calling for rates to stop being raised for the past 2 weeks already, saying it's over, blah, blah, blah. And if these minutes come out where they're like, saying, well, let's, a little data here and here doesn't change our thought process.
I hear you,
and
man.
I think that's what they're going to say.
Pretty wild how quickly the market can get ahead of itself, it seems, and we'll see if we do it again. Teddy, man, we appreciate
the yen
it.
in the hole, my friend.
Have a great Thanksgiving, man. We'll talk to you next week. Okay, stay tuned, folks. Basil Chapman, he's coming up next. Have a great Thanksgiving, everybody. Be safe out there.